Imagine waking up one morning and everything you've worked for, your savings, your investments, your hard-earned money, feels smaller, less secure, like it could vanish overnight. You check the news, and headlines scream about inflation, political chaos, and market crashes. Now, ask yourself, in a world where paper money can lose value in months, what has truly stood the test of time? The answer is simple: gold. For thousands of years, across continents and empires, gold has been the ultimate preserver of wealth. Think about ancient Egypt. Pharaohs adorned themselves with gold, not just because it looked beautiful, but because it represented eternal value. Gold was buried with them, stored in massive temples and used as a measure of wealth. It wasn't just a luxury, it was security, status, and a hedge against uncertainty. Fast forward to Rome, where gold coins powered an empire. Emperors understood the power of gold. It could buy armies, influence politics, and stabilize economies. Even when paper currency was non-existent, gold was universally trusted. And in India, long before modern banking, families accumulated gold not for speculative reasons, but as insurance against famine, war, and economic turbulence. It passed from generation to generation, an unbroken chain of security. Imagine the contrast. While crops could fail, currencies could collapse, and governments could fall, gold remained tangible, portable, and universally valued. Today, modern analysts echo what civilizations have known for millennia. In times of uncertainty, geopolitical tension, or financial instability, gold consistently preserves wealth, often outperforming other assets. And this isn't just theory. During the 2008 financial crisis, when stock markets crashed and real estate values plummeted, gold surged as investors sought safety. Its historical reliability is what makes it different from any other investment. Before we dive deeper into how civilizations from Egypt to Rome and India used gold to secure their futures, and what modern investors can learn from them, make sure to hit the like button and subscribe to the channel. You won't want to miss how ancient wisdom is still shaping wealth strategies today. Over the next few minutes, we'll explore astonishing stories, real historical events, and practical insights that prove why gold isn't just a shiny metal. It's a timeless fortress for your money. By the end, you'll see that understanding gold isn't just history. It's your guide to protecting wealth in the modern world. Let's travel back thousands of years to the Nile Valley, where ancient Egypt thrived. Imagine the pyramids rising from the desert, massive stone monuments that still amaze us today. But alongside those incredible structures, gold flowed through every part of Egyptian life. Pharaohs didn't just wear gold jewelry for show, they stored it as a symbol of eternal power. Temples and tombs were filled with gold statues, coins, and ornaments, carefully preserved for the afterlife. Gold wasn't just decorative, it was considered divine. Egyptians believed it connected them to gods, and it acted as a form of money that could never be devalued. Families often kept gold hidden in their homes or buried it with loved ones, creating a kind of private bank that no king, war, or famine could touch. Now, fast forward a few centuries to Rome. Picture the bustling streets of the Roman Empire, markets filled with goods from across Europe, Africa, and the Middle East. Gold coins were everywhere, and emperors knew their importance. The stability of the empire depended not only on armies and law, but also on a trusted currency. Gold backed trade, paid soldiers, and secured political loyalty. When crises hit, like invasions or economic turmoil, the people who held gold remained protected while others faced ruin. Roman historians wrote about families passing down gold for generations, a practice that built long-lasting wealth and social security. What's fascinating is how these two civilizations, Egypt and Rome, shared a common understanding. Tangible wealth lasts, paper promises do not. They intuitively understood risk management long before modern finance existed. Even in times of famine, war, or political upheaval, gold remained portable and universally valuable. Modern investors can learn from this. Today, we have banks, stocks, and cryptocurrencies, but none have the same historical track record as gold. The reason is simple. It's physical, finite, and universally recognized. When everything else fluctuates, gold provides certainty. And as we explore the story of gold in India next, you'll see another culture that understood its power, using it not just as money, but as insurance for generations. Keep watching, because these lessons from history are exactly what modern wealth preservation is built on. Now, let's journey to the Indian subcontinent, a land where gold has been treasured for thousands of years, not just as a symbol of wealth, but as a cornerstone of culture. Imagine bustling markets centuries ago, with merchants trading spices, textiles, and coins, but always measured against gold. Families in India didn't just accumulate gold for display, they treated it as financial security that could protect them through famine, war, or uncertainty. Gold was embedded in rituals, festivals, and weddings, passed down from generation to generation. Unlike paper money or crops, gold didn't spoil, wasn't easily stolen, and its value rarely diminished. Consider the story of royal treasuries. Kingdoms often hoarded vast amounts of gold, not for speculation, but to stabilize their economy during times of conflict or shortage. Even ordinary families followed the same instinct. Hidden jewelry, coins, or small ingots acted as a personal safety net. Fast forward to today, and the lesson is clear. The Indian mindset towards gold was not just cultural, it was practical. Analysts now call it ancient risk management. When modern investors look at gold, they often see a hedge against inflation or market crashes. But in India, generations of people already understood this centuries ago. It was insurance that traveled with you, liquid enough to sell in any market, portable enough to carry in times of crisis, and universally recognized. This philosophy explains why, even in today's India, households hold significant portions of wealth in gold, despite having access to banks, stocks, and real estate. The wisdom of preserving value over chasing short-term gains has been passed down for thousands of years. And it's not just India. When you look at Egypt, Rome, and India together, a pattern emerges. In every major civilization, gold was the one asset that survived political upheaval, wars, and economic collapse. The story doesn't end there. By examining how these civilizations protected, used, and valued gold, we uncover strategies that investors in the modern world can apply, ensuring their wealth isn't just paper deep, but enduring. As we move forward, we'll connect these historical lessons to modern analysis, how gold behaved during financial crises, inflationary periods, and even today's global uncertainties. Stick around, because the connection between ancient wisdom and modern wealth preservation is more powerful than you might imagine. Now that we've seen how Egypt, Rome, and India relied on gold for stability, let's look at why this matters for us today. History isn't just interesting, it's predictive. Analysts studying gold's performance during crises often point to the same patterns ancient civilizations understood intuitively. Gold rises when uncertainty spreads, whether through wars, inflation, or financial crashes. Think about it. When Rome faced invasions or political turmoil, those who held gold survived. When Indian kingdoms faced famine or shifting empires, families with gold had a lifeline. Modern markets follow a similar logic. During the 2008 financial crisis, stocks plunged, banks teetered, and confidence evaporated. But gold surged. Investors who kept gold protected their wealth. This mirrors the ancient strategies we just explored. Gold's unique qualities make it timeless. It's portable, divisible, durable, and universally recognized. Unlike paper currency, which can be devalued by governments, gold can't be printed or created out of thin air. It's a natural hedge against uncertainty. Today, financial advisors often recommend keeping a portion of your portfolio in gold, precisely because history proves it preserves value. But there's more. Modern tools allow investors to measure gold's behavior in ways ancient civilizations couldn't. Analysts track gold prices against inflation, currency fluctuations, and geopolitical events. Patterns emerge. When confidence in paper money declines, gold rises. When geopolitical tensions spike, gold spikes. Essentially, we're witnessing the same lessons Egypt, Rome, and India mastered centuries ago, but now we can quantify them. Understanding these patterns is key. By combining historical insight with modern analysis, investors can build a strategy that protects wealth while still participating in growth opportunities. Gold isn't just a relic of the past. It's an active, functioning hedge for today's economy. And as we dive into stories from more recent history in the next section, you'll see exactly how gold preserved fortunes even when modern financial systems collapsed. Keep watching, because the journey from ancient empires to today reveals a secret that banks, governments, and ultra-wealthy individuals have relied on for centuries. As we move into more recent history, gold's role as a wealth preserver becomes even more evident. Picture Europe in the 16th and 17th centuries, a continent constantly in turmoil, wars, plagues, shifting kingdoms, and emerging colonial powers. Paper currency was unreliable, banks were still developing, and rulers often debased coins to fund wars. But gold remained steady. Merchants, nobles, and explorers understood its power. Spanish galleons carried tons of gold from the Americas, not just to fund empires, but to store value in a tangible, unshakable form. Families that held gold during invasions or economic turmoil survived, while those relying solely on crops, goods, or paper currency often lost everything. Fast forward to colonial India, Africa, and the Americas, where gold wasn't just a commodity, but the backbone of global trade. Nations hoarded it, investors sought it, and everyday people prized it. Even when markets were chaotic, gold's value held firm, making it a safe harbor in stormy times. The lesson is clear. Gold's preservation of wealth isn't theoretical. It's proven, repeated, and consistent across continents. Modern investors often overlook this continuity. Today we have stocks, bonds, real estate, and cryptocurrencies, all of which fluctuate dramatically in crises. Yet gold's historical track record shows a remarkable stability across centuries. It's why central banks hold it, why wealthy families invest in it, and why advisors recommend keeping a portion of portfolios in physical gold or gold-backed instruments. By studying history, we see a recurring truth. In every period of uncertainty, from ancient Egypt to colonial Europe, gold was the asset that protected wealth and provided security. Understanding this pattern allows modern investors to act strategically, not reactively. And in the next part, we'll explore how gold performed during the 20th century's most dramatic financial upheavals, the World Wars, the Great Depression, and the post-war economy, and why those lessons are just as relevant today. Stick around, because these stories will reveal how gold's timeless value helped ordinary people and nations weather the storms of modern history. The 20th century tested gold like never before. Imagine the chaos of the First World War. Nations plunged into conflict, economies strained, and paper currencies lost value almost overnight. Governments printed money to fund armies, but the people who held gold coins, bars, or jewelry remained secure. Gold didn't vanish, devalue, or depend on anyone's promise. It simply held its worth. Then came the Great Depression of the 1930s. Stock markets collapsed, banks failed, and unemployment soared worldwide. Paper money felt worthless in the hands of ordinary citizens, but gold continued to provide stability. Those who had accumulated it could weather the worst of the economic storm, paying for essentials and preserving wealth when almost everything else failed. Fast forward to World War II. Nations hoarded gold as strategic assets, transporting it across continents to prevent it from falling into enemy hands. Families hid it in homes and safe deposit boxes, protecting what governments couldn't guarantee. Gold was more than wealth. It was survival. Even after the war, during post-war reconstruction and economic volatility, gold remained a trusted store of value. It wasn't subject to the sudden collapses that could wipe out banks, savings accounts, or investments in unstable economies. Modern analysis confirms what history shows vividly. Gold's performance in times of extreme uncertainty is unmatched. Unlike stocks, bonds, or paper money, it is resilient, portable, and universally recognized. Investors today can learn from these lessons. Diversifying with gold isn't just a precaution. It's following a strategy proven across centuries, from pharaohs and Roman emperors to families surviving global wars and economic depressions. Understanding this continuity allows modern wealth preservation strategies to combine historical wisdom with contemporary tools, ensuring protection in both everyday fluctuations and extreme crises. And as we move into Part 7, we'll explore the late 20th century and 21st century, including inflationary crises, modern financial crashes, and how gold continues to prove its worth as the ultimate safe haven. Stick with me, because the next stories will reveal strategies you can use right now to protect your wealth in today's volatile economy. As we enter the late 20th century, the world economy became more complex, yet gold continued to prove its timeless value. Consider the 1970s, a period of runaway inflation, oil crises, and political turmoil. Paper money was losing value fast, and ordinary savings were shrinking in real terms. Yet gold prices surged, reflecting the same principle that ancient Egyptians, Roman citizens, and Indian families understood centuries ago. Tangible wealth preserves value when uncertainty strikes. Investors who held gold weathered these storms while others struggled to keep up with rising costs of living. Moving into the 1980s and 1990s, markets expanded and financial instruments became more sophisticated. Stocks, bonds, mutual funds, and later digital trading platforms. But volatility never disappeared. Recessions hit, geopolitical tensions rose, and global events caused sudden market swings. And through it all, gold remained a reliable hedge. Even during the 2008 financial crisis, when banks collapsed and global markets tumbled, gold soared as investors sought safety. Its behavior mirrored historical patterns. When confidence in currency or institutions falters, gold gains. Today, gold isn't just a relic of history. It's an active tool for modern wealth preservation. Analysts use it to balance portfolios, hedge against inflation, and reduce overall financial risk. It's physical, finite, and universally recognized, making it an anchor in an otherwise unpredictable economic world. The lesson from centuries of history is clear. Gold consistently acts as a safe haven during turbulence. By understanding this, modern investors can make strategic decisions rather than reactive ones, combining historical wisdom with contemporary financial tools. So, now that we understand how gold preserved wealth across millennia, let's talk about how you can use it today. Imagine your portfolio as a ship navigating stormy seas. Stocks, real estate, and bonds can fluctuate wildly, tossed by economic waves. Gold acts like the anchor, steadying your financial ship when uncertainty strikes. One common strategy is diversification. Instead of putting all your money into volatile markets, a portion, often 5% to 15% of your total portfolio, can be held in gold. This could be physical gold like coins or bars, or digital gold-backed assets, depending on what's accessible and secure. Another approach is using gold as an inflation hedge. History shows that when prices rise rapidly, the purchasing power of cash diminishes, but gold typically retains or even increases in value. Investors in the 1970s learned this lesson the hard way. And today's financial planners still recommend gold during periods of rising inflation. Timing can also matter. Historically, when markets collapse or confidence in currency drops, demand for gold spikes. While no one can predict crises perfectly, having gold already in your portfolio ensures you're prepared. And don't overlook cultural or generational strategies. Just like Indian families passed gold down through centuries, modern households can treat gold as long-term wealth preservation, an inheritance shielded from economic uncertainty. Finally, gold isn't just for individuals. Corporations, governments, and central banks continue to hold it as insurance. Understanding why they do this reveals the bigger picture. In times of extreme uncertainty, gold isn't speculative, it's security. The key takeaway is simple. History, from pharaohs to modern markets, proves gold works. It's tangible, finite, and universally trusted. By incorporating it strategically, you align modern financial planning with centuries of proven wisdom. Beyond numbers, gold has a unique power over human psychology. Think about it. For thousands of years, people instinctively trusted gold even when markets, governments, and currencies failed. There's a reason pharaohs adorned themselves with it, Romans hoarded it, and Indian families passed it down through generations. Gold provides a sense of security that paper money often cannot. Psychologists call this a tangible confidence anchor. When uncertainty strikes, be it war, economic collapse, or inflation, holding gold reassures people. You can touch it, see it, and even carry it, unlike digital assets or bank balances that exist as numbers on a screen. This emotional connection reinforces its value, which is why gold prices often spike during crises. Modern investors experience this too. During the 2008 financial crisis, for example, people flocked to gold, not just for its historical performance, but because it felt safe. Governments, central banks, and even corporations understand this instinct. They hold gold not only as a financial hedge, but as a psychological tool, an unshakable symbol of security in a volatile world. The same applies today. Market uncertainty, geopolitical tensions, or inflation fears trigger similar behavior globally, ensuring gold remains a reliable store of value. Understanding the psychology behind gold can help modern investors make smarter decisions. When markets panic, it's easy to sell out of fear or chase trends, but those who understand gold's enduring emotional and practical role often hold steady, preserving wealth when others lose it. This combination of historical precedent, a modern analysis, and psychological insight explains why gold is more than an investment. It's a centuries-old tool for security, confidence, and survival. Now, after thousands of years, from the tombs of Egyptian pharaohs to the markets of ancient Rome, the households of India, and the crises of the modern world, the lesson is clear. Gold is more than just a shiny metal. It is a proven, reliable way to preserve wealth across time. Today, you can apply the same principles that civilizations used for millennia. First, think of gold as a foundation, not a speculative gamble. Allocate a portion of your portfolio to physical gold, coins, or trusted gold-backed assets. This gives you stability when markets fluctuate or currencies weaken. Second, consider gold as insurance against uncertainty. Inflation, geopolitical tensions, or unexpected financial shocks can erode paper wealth, but gold remains tangible, finite, and universally recognized. Third, adopt a generational mindset. Just as Indian families passed gold down for centuries, holding gold today can protect your family's future. And finally, combine historical insight with modern tools. Track gold's performance relative to markets, diversify smartly, and stay informed. This is how you build a modern portfolio grounded in centuries of proven wisdom. History proves that gold works in all conditions: famine, war, economic collapse, or market volatility. It is trusted not only by ancient civilizations, but also by governments, central banks, and savvy investors worldwide. And here's where you come in. Now that you've learned why gold is the ultimate wealth preserver, take a moment to think about your own financial strategy. Are you prepared for uncertainty? Have you explored the protective power of gold? Drop your thoughts in the comments below. I want to hear how you think gold fits into modern wealth planning. And if you found this video valuable, share it with friends, family, or anyone interested in protecting their wealth. Don't forget to like and subscribe so you can catch future videos where we break down timeless financial strategies into actionable insights. By learning from the past, from ancient Egypt to today, you can protect your wealth, make smarter decisions, and gain the confidence that generations of civilizations already understood. Gold preserves value, even when everything else falters. History has spoken, and the choice is yours. Let gold be part of your financial fortress.